Welcome to the Legal Insight podcast by HHQ, where we help you unpack the world of law, business, and tech. Welcome to episode 29, and yes, the big 29. We're inching forward to the bigger 30, right? And in fact, the next episode will mark not only a milestone number, but also the start of something even bigger as we evolve the series into a new season. Perhaps Johnson will, dress down a little bit more.
Season 3.
Season 3.
Only up, no down.
Yes, only up.
I'm going to wear a tie next time.
You're going to wear a tie. When are you going to wear a 3-piece, Khai?
No, man. I'm not a banker.
All right. Yeah, so we need to wear the finance bro jacket.
Yes,
right?
correct. The vest, right?
Patagonia vest or
Yes.
something like that. Right, now this episode is a continuation of episode 28, where we unpack one of the most important developments in Malaysia's financial landscape. Following the release of Bank Negara Malaysia's discussion paper on asset tokenization in the Malaysian financial sector, we explored the rapidly emerging world of tokenized money, including CBDCs, tokenized deposits, and of course, stablecoins. Now, if all of that sounds alien to you, go back to episode 28 to understand what CBDC and tokenized deposits is, and come back to this episode to understand what stablecoin is, which is today's topic, right? Now, let's dive right in.
Yeah.
Johnson, what is stablecoin? What are they?
Yes. Stablecoin is supposed to be stable.
Yeah.
So, of course, when it comes to stablecoin, the easiest way for us to explain, especially for those who has never used or never exposed to stablecoin before, from a very technical explanation, stablecoin, we are referring to digital token that's actually being minted on blockchain. And then when you are referring to stablecoin, the reason is that stablecoin is supposed to be stable. The concept is supposedly to be pegged one-to-one to any form of national currency. In other words, you can have different forms of stablecoin. You can have USD stablecoin, you can have MYR stablecoin, you can have SGD stablecoin. As long as there's a nation and then you just tokenize whatever kind of their currency on chain. And then the whole concept is always supposed to be one-to-one. And the funny thing is, even though it names stablecoin, the irony is usually not stable. When we are talking about stablecoin, there's a concept called DPEG. DPEG, it means that the value will actually go above or below 1. So that happened very, very frequently. The reason is purely because of the volatility. When we are talking about stablecoin, that in the past, we all know that there are actually many forms of crazy stablecoins. Stablecoin that's actually being backed by commodities, stablecoin being backed by asset, stablecoin that's even backed by algorithm. I mean, if I mention USD, basically this may actually cause some PTSD by some of the listeners. Because what happened of USD is actually one form of the coin algo stablecoin that is actually being developed, being built on the Terra ecosystem. And then what happened is, I think year 2022, and everything collapsed. So it literally wipe out almost 40 to 50 billion value. And then those who were holding that USD stablecoin, which including me, that entire stablecoin became valueless. That is why stablecoin has always been a very sensitive and also very important topic. Because when you are holding stablecoin, the minimum expectation is supposed to be stable. We all know that as long as the underlying asset is not the fiat currency, it can never be stable. Why is it so? When I'm talking about commodities, when I'm talking about assets, these items, these assets will actually fluctuate in value. The only way, the safest form of stablecoin, or we are calling it the gold standard, is the stablecoin where it's 100% backed by fiat currency inside treasury. Give a very simple example. Let's say right now, me as a stablecoin issuer, I would want to actually mint. I mean, the key thing about minting is just issuing, just a fancy term. If I'm going to mint 100,000 stablecoin, that's equivalent to Ringgit Malaysia, then the only way for me to ensure that 100,000 stablecoin will always fix a certain value is by having 100,000 inside my treasury. Because in the event anyone that comes to me, my clients come to me, say that they want to redeem their stablecoin with their actual cash, I always have 100,000 inside my treasury for always ready for redemption. So this is why there will never be a situation of bank run. This is the whole concept of stablecoin. Supposedly to be stable in the past is never been stable. But moving forward, we really believe that all countries, they will going to be adopt only one form of stablecoin, which is a stablecoin that is fully backed by fiat currency within the treasury.
Great. Now, Khai, from a listener's perspective, stablecoins may seem superficially similar to tokenized deposits,
Yes.
which we learned
Yes.
earlier about it. Both appear to be digital representations of value. Both move on chain. Both settle quickly. So, who actually issues stablecoins, and in Malaysia, who actually gets to issue them?
Yeah. We have been doing a lot of comparison in these two episodes, right?
Mm.
On the surface, again, like you've mentioned, these two creatures, they are very similar. Stablecoin and also tokenized deposit, they both move on chain and they can settle quickly, as you've mentioned. Again, the big differentiator would be the issuer. In the previous episode, go and check it out if you haven't. We said that when it comes to tokenized deposits, only the entities or institutions who are allowed under the law to take deposits would be able to issue tokenized deposits, or rather, only those, essentially, only the financial institutions, the banks, who can take deposits from you, can tokenize the deposit that you have given to them and give you the digital representations of your deposit, right? But on the other hand, when it comes to stablecoin, really anybody can do it because you are not bound by law to only limit to those who can take deposits only. I am just tokenizing a form of asset. So a tech company, for example, fintech company, any company who with the necessary infra and also the capabilities and also the resources to operate and run a tokenization platform will be able to issue stablecoin. But that being said, of course, in the later section, we will talk a lot more about the regulatory treatment of stablecoin, right? Even though, yes, anybody with the right setup will be able to issue stablecoin, but the truth is that currently the Malaysian legal system still doesn't really support the issuance of stablecoin.
Thanks, Khai. Now, Johnson, based on your experience advising all these industry players,
Yeah.
what role do you see stablecoins playing? You know, we have tokenized deposits, we have CBDCs, we have e-money. I just don't see how stablecoin can play a role in this market anymore. Like, what do you think about that?
Yeah, to be honest, I think that a lot of time when we are actually advising, whether it's banks or even stablecoin issuers or even those traditional fintech companies, I mean, the key question that we're asking, to be honest, because stablecoin is actually the form of money that actually mirrors e-money the most. Because like or not, stablecoin is actually being meant to be used by the retail market. But if I'm actually going to provide my own very personal, very honest opinion, I don't think that stablecoin will ever be replacing e-money. The reason because actually e-money is actually one of the most perfect innovation in the market. It's seamless, it's fast, and I can use it for almost all form of transaction.
Yeah.
And for me, I use e-money almost on a daily basis. When I want to buy a plate of chicken rice, when I want to buy my own char kway teow, my favorite char kway teow, I will just be using e-money. And then it costs me nothing. It's almost instant. And to be honest, everyone is using it. So I do not see stablecoin to be replacing e-money in that particular scenario, in that particular aspect. The reason because no matter how good your stablecoin is, e-money is almost perfect in the situation already. But one of the key things that stablecoin they are able to afford that neither either our hard cash or even e-money or even any form of bank transfer will be able to do it is actually on-chain transaction. Because as we mentioned earlier, as we are moving from Web 2 to Web 3, everything will be built on ledger. Everything will be built on blockchain. What does it mean? It means that in order for me to actually settle, in order for me to actually enable any form of transaction, I will need Web3 money. The only form of Web3 money, it means that the Web3 money, it must exist on the blockchain. And just like as you mentioned, there's CBDC, there's tokenized deposit, and the last one is actually stablecoin. I would like to think that stablecoin is actually the form of money that is most user-friendly, most customer-friendly, because I'll be able to go to issuer to be purchasing the amount of stablecoin that I want, and then I will also be able to actually conduct my on-chain transaction on my own without giving any form of instruction to the bank. That will actually make it faster as well. So I would think that in the near future, stablecoin will definitely be playing a very unique role in the entire tokenization ecosystem. That world may not be here yet. The reason because tokenized asset is still a new concept. People are still trying to explore. People are still trying to understand actually how can they actually tap and also maximize the potential. But I really think that stablecoin has a very unique gap for them to fill in this ecosystem. They are not here to replace e-money. I don't think we'll actually see a situation where we are using stablecoin to be purchasing a plate of chicken rice in the near future, but they will be using that for any form of on-chain transactions, especially for tokenized asset.
Right? Maybe a tokenized plate of chicken rice.
Maybe they will happen.
Now, that being said, Khai, from a regulatory perspective, can anyone just like me
Yeah.
issue a stablecoin tomorrow and start offering it to people? And can anyone simply use stablecoins as a means of payment in Malaysia? Like, I'm a chicken rice store owner and I want to issue this chicken rice coin to buy my chicken rice. Can I do that tomorrow?
Technically, I would say yes, because based on our conversations with a lot of industry players, they are saying that the technology are there, right? For them to implement it is something that is very, very quick. But legally speaking, the answer is no, due to regulatory uncertainty. Stablecoin exists in a space where it somewhat falls within a lacuna, or rather, it falls within a gap in the law, because what do you use stablecoin for? You use it for payment purposes, right? So if anything that is used for payment purposes, they essentially function as a form of payment instrument. And like it or not, currently in Malaysia, other than cash, the officially designated payment instruments, there are only four: debit card, charge cards, credit card, and also e-money. So anybody who is supposed to be issuing any of these payment instruments is supposed to be regulated under the Financial Services Act, as subject to the regulation and supervision of BNM. And because stablecoin, since its very purpose is for payment, it actually functions as a payment instrument, but it's not currently designated as a payment instrument. So technically, regulatory speaking, from a compliance standpoint, no one is supposed to be issuing stablecoin and then allow it to be used for payment purposes, right? That's the long and short answer for your question. But at the same time, BNM has the power to designate and increase the list of officially designated payment instruments, right? But the condition for that is the payment instrument need to reach a certain level of widespread and common adoption and common usage first. So chances are, if stablecoin is released, it will be designated as a payment instrument, and whoever that is issuing or whoever that wants to issue stablecoin, they will have to put themselves under and subject themselves to the regulations and supervision of BNM.
Yeah.
Thanks, Khai. Now, speaking of regulation, Johnson, I know for a fact that you've advised companies looking to issue stablecoins in Malaysia and have been engaging regulators such as SC and BNM on these matters. Now, from your vantage point, what are some of the biggest regulatory concerns regarding stablecoins?
Yeah, excellent question. I said I can't really speak on behalf of BNM or even SC or any form of regulators.
You can't?
But of course I can't. But purely from a legal and also regulatory perspective, I would think that as long as any companies, they want to issue any form of stablecoin, especially using it for payment or for remittance purposes, there are two key concerns that we always address again and again to those founders of those companies. Number one is AMLA consent. The second one is on-ramp and off-ramp consent. So when it comes to AMLA consent, I think it's something that most listeners will be very familiar with, because regardless whether you are stablecoin issuers, as long as you are dealing with money, as long as you are dealing with bank transfer, even e-money or stablecoin in that particular regard, you have to take AMLA into concern. Why is it so? Because money laundering is a very severe and serious offense. So especially right now when we are talking about stablecoin, you would actually want to ensure that the use of fund, the use of money, the use of stablecoin is for legal purposes. It wouldn't raise or cause any AMLA reflex. So that's number one. Are you going to implement the right KYC, actually the right protocol to monitor entire flow? Another concern is actually on-ramp and off-ramp, because of the unique feature of stablecoin that is actually being developed, being used on blockchain. The key thing about blockchain is it can be quite centralized, it can be permissioned, or it can be totally decentralized as well. When things are decentralized, it means that I can actually off-ramp it to another country. I can use it for whatever purposes. And that, from a bigger perspective, from a monetary policy, it would actually cause monetary instability. Because, for example, if I actually have access to stablecoin, I can be selling my stablecoin, I can be transferring my stablecoin out from Malaysia to, for example, to USD. And then what does it mean? It means that this is going to cause forex losses. It's going to actually cause outflow of ringgit. And when we are talking about significant amount of money, this will affect our monetary stability, monetary system in Malaysia. So I would say that for especially stablecoin issuers, they have to find a way for them to develop the parameters, the safeguard to ensure anything in relation to AMLA, in relation to on-ramp or even off-ramp, because you wouldn't want this become like an illegal means for them to just keep flowing out money outside of Malaysia.
Dang, like this is probably the most unstable episode I've ever experienced. Like everything sounds really shaky. Sounds like you have to take on a lot more caution
Yep.
against those risks.
A lot of risk.
Yeah. So Khai, that's the question, right? What are those technical AMLA, cybersecurity, or whatever risks that Johnson has mentioned that we should be aware of?
Yep.
Because stablecoin sounds promising, but at the same time, right now, it just doesn't sound too stable.
Yep.
Yeah. The first risk is, of course, something that Johnson has mentioned a lot just now. It's perceived stability, right? At the end of the day, stablecoin is just not. It's supposed to be stable, but like it or not, there's a possibility and there's a high tendency of it not being stable. And it really depends on the reserve quality, operational discipline, and also the transparency of the issuer. So I would not go too much into detail since Johnson has really covered it. The second risk, I would say, is technology risk. Ultimately, stablecoin, CBDC, and tokenized deposit event, they are all powered by blockchain technology, DLT, distributed ledger technology. So any technology, you will have technological risk, you have cybersecurity risk, especially when it comes to stablecoin.
Yeah.
Let's say not everybody will be building their stablecoin on the same chain, right? If I'm building them on different chains, then at the end of the day, when it comes to transfer, cross-chain transfer especially, that's where mishap and also vulnerabilities can happen. Think of it this way, the chains are essentially like towns. So how do you connect two different towns, right? You have to build highways. While towns themselves can have a lot of security because maybe the mayor and the government, they will build walls, they will build CCTV surveillance in the town. So the security of the town will be very, very good. But when it comes to the road and the highways, the security may not be so good, right? Driving in the middle of the highway, you may not necessarily see CCTV. Sometimes you don't even have street light. So blockchain is the same. To connect two different blockchains to allow transfer between cross-chain transfer, essentially, we have what we call a bridge to facilitate transfer of tokens. Bridges are frequently the targets of threat actors. Whenever they want to, whenever threat actors they want to, say, attack a chain, they don't attack the chain themselves. They will attack it when they are transfer, or they will target the breach vulnerabilities. So that's an area that issuers will have to take note of. Essentially, that's where Bank Negara's RMIT will come into play, and where compliance with BNM's RMIT will really have to step out. And we foresee that chances are RMIT will have to be perhaps amended, supplemented with blockchain-related security measures. When it comes to AMLA risk, this needs no further explanations. Our viewers should know by now that cryptocurrencies and anything that is blockchain-related, they are very they are notorious of being used for illicit transactions. Johnson also covered this again and again just now. When it comes to stablecoin, for it to be properly regulated, private chain would be preferred, especially private chain with permissioned. This is also something that we have seen in the discussion paper, right? Because permission private chain will just allow BNM's supervisory control over the entire chain. Permission chain allows more stringent KYC control and also intervention when illicit transaction is detected on chain. So those are the key risks that I would say stablecoin present, and where people should be paying attention to when selecting perhaps which technology solutions provider and also which chain to use.
Wow. So now the next question is, and the final question, right? After listening to the Legal Insight podcast, after hearing, all the hoops that people have to jump through and all the risks that's involved, and assuming someone still says, I want to issue a stablecoin. Now, Johnson, for someone like that, someone who's crazy enough to think like that, or someone who's ambitious enough to think like that, what should they be thinking about, and what steps should they take in order to, successfully issue a stablecoin that is actually stable?
Look for a crazy lawyer as well.
Yeah, they should totally call us. I mean, jokes aside, I think this is not hard sell, especially for one who is really looking into issuing stablecoin or to actually go deeper into this space, they should really talk to a lawyer, especially those lawyers who really understand the fintech industry, understand blockchain, and most importantly, lawyers, they have actual experience dealing with BNM and also SC. Because why is it so? Like it or not, whether when we are talking about fintech, whether we're talking about crypto, when we are talking about payment, it likely to fall within the ambit, the legal ambit of FSA. So FSA is essentially the governing law concerning any form of payment, whether it's a credit card, is it e-money, or just any form of payment purposes. And infringement of actually FSA, it actually carries very, very severe consequences. And it's not something that you would actually want to mess around. If anyone is listening to this podcast and then you really have an intention to issue stablecoin, it's really important for you to speak to a lawyer, because you will need to talk to regulators, you have to talk to BNM, and then the whole process is not going to be easy. You need to actually set up consultations, then you need to present your business plan, you need to potentially participate in a sandbox before you even get any form of clearance or even getting properly licensed or approval to launch whatever product that you want. So it's important to be properly advised.
Thanks, Johnson. Now, you've heard the guys, this content has been provided to you for free. Legal advice, look for none other than Khai and Johnson. They continue to be at the forefront of the fintech industry. And to all our listeners, thank you for being with us for over 29 episodes now. The next episode will certainly be something to look forward to as we celebrate our 30th episode. You don't want to miss it. This has been the Legal Insight podcast by HHQ, and we'll see you in the next episode.